In this video, we're going to be performing a complete stock valuation on Johnson & Johnson. Now, this is a stock that's currently trading at $176 per share, and year to date, they're currently up 2.84%, which might not seem like a lot, but when you look at the broader market in that same amount of time, it's down nearly 15%. So actually, this return we've seen from Johnson & Johnson year to date is pretty solid. Now, one of the reasons that we see this stock talked about so much among dividend investors is because they have been increasing the amount they pay in dividends for 60 years. That is absolutely unbelievable. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Johnson & Johnson. And on this spreadsheet, we have 4 different valuation models. We have Graham's valuation, a discounted cash flow model, multiples valuation, and a dividend discount model. And all 4 of these valuations will roll into our output tab. But let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. Now, one of the things that's great about this stock screener we have here is it's completely interactive. So if we type in Johnson & Johnson stock ticker here and hit enter, we can see all of this data is going to automatically fill in. Now we're currently looking at a 750-day change. But let's go ahead and zoom in a little bit more and look at a 250-day change and hit enter. We can kind of see the price movement here. Now they've continued to increase their price over the past 250 days. If we come over here and look at the dividend data, we can see they're paying out $4.52 per share. Current dividend yield is sitting at about 2.56%, and their payout ratio is 56%. Now their moving averages 20 and 50 day are all down slightly, but their 200 moving day average is still positive. Like I mentioned earlier, the current price is $176 per share, and their 1-year and 2-year returns are both positive, pretty solid at 7% and 19.77%. Now analysts do currently have a top price target of $190 per share, and institutional ownership is fairly high at about 70%. But let's go ahead and jump into our first valuation, which is Graham's valuation. Now, this is a valuation invented by Benjamin Graham, who is one of Warren Buffett's mentors, and he laid out a formula for us to calculate intrinsic value, as we can see right here. The first thing we need is the earnings per share, which we have listed for Johnson & Johnson right here. We're then going to multiply this by 7, which is the price to earnings of a company with no growth, and then put in our growth rate projection for Johnson & Johnson, which isn't super high. Analysts are projecting about a 6% growth rate. We're then going to multiply that by 4.4, which is the average yield of AAA corporate bonds. Once we have that number, we're going to divide it by Y, which is the current yield of AAA corporate bonds, and at the time of this video, it is currently sitting at 4, and that gives us an intrinsic value of $106 per share, which is quite a bit lower than Johnson & Johnson is currently trading at. Now, it's important to realize that the current yield of AAA corporate bonds plays a large role in this valuation metric. Earlier this year, this number was as low as 2.8, so if we change it to 2.8, you can see the intrinsic value would jump all the way up to nearly $152 per share. So it is important to note that that current yield of AAA corporate bonds, which kind of shows how the market is performing as a whole, is a huge role and factor in this valuation model. But let's go ahead and jump over to our discounted cash flow analysis. And in order to perform our discounted cash flow analysis on Johnson & Johnson, we need to project a growth rate for the future free cash flows for this company. So what I have done is I have looked at the historical free cash flows for Johnson & Johnson from 2016 to 2021. I found that they had an average growth rate of about 4.5%. Now, for the future free cash flows, due to industry standards and the historical free cash flows, I am projecting a growth rate of about 6% for these future free cash flows, which you can see I projected to these numbers here. I then also used it to calculate the terminal value, which is the sum of all the future free cash flows past the year 2030 for this company. I then took the present value of all of these future free cash flows and added them together, which you can see right here. I added the company's cash and cash equivalents and subtracted out their total debt to come to our equity value. I then divided by the number of shares outstanding to get our discounted cash flow price per share of $176 per share. Now let's go ahead and jump over to our multiples valuation. And essentially the idea behind our multiples valuation is we should be able to value Johnson & Johnson using a price to earnings multiple based on how the market values companies that are very similar in structure to Johnson & Johnson. So we're looking at companies like Pfizer, MRK, ABBV. We're taking their stock price and dividing it by their earnings per share to calculate their price to earnings multiple. We then take the average price to earnings multiple and multiply it by Johnson & Johnson's earnings per share to come to our intrinsic value of $119 per share using our multiples valuation. Now, it is important to remember when using a multiples valuation, we have seen a huge market decline, so all the price to earnings multiples are going to be slightly lower during this time, which is going to lead to a lower intrinsic value. So some people do believe that it might be better to look at the historical price to earnings multiples for Johnson & Johnson instead of just looking at the comparables as well. But we'll talk more about that on our output tab. But let's go ahead and jump over to our dividend discount model now. And the idea behind our dividend discount model is we should be able to value a company based on how much they pay out in dividends and how much they are increasing their dividend payouts. So what I've done is I've plugged in the quarterly dividend payouts over the last few years for them so I can see how much they pay out yearly. This then allows me to see the growth rate year over year for their dividend payouts. And we can see they have an average growth rate of about 5.86%. So that's pretty solid dividend growth. So for this model, I'm projecting a growth rate of about 5.5% for their dividends using a discount rate of about 8%. This gives us an intrinsic value for our dividend discount model of $190 per share, which is higher than that current price of $176. Now let's go ahead and jump over to our output tab. And here on our output tab, we have all 4 of our valuation models. Graham's valuation at 106, multiples at 119, discounted cash flow at 176, and dividend discount model at 190. When you average all 4 of these valuation models together, we can see we come to an intrinsic value of $148 per share for Johnson & Johnson. Now it's currently trading at $176 per share, so that's obviously under its intrinsic value, but let's go ahead and apply our margin of safety to see what our acceptable buy price is. So I'll come right here and I'm gonna apply a 20% margin of safety and hit enter. And based off of this, we can see the acceptable buy price for this company is $118 per share. So our spreadsheet is telling us this is not a stock we should be selling. Now, even if you think the multiples valuation is not a great valuation model in this scenario, let's go ahead and take it out and see how our analysis changes. We can see the intrinsic value is now $157 per share. So our acceptable buy price is still not a price that we would want to be buying this stock at. Now, like I said earlier, a lot of investors do like this company solely because of the phenomenal historical dividend growth that they've received. Now, if we jump over, we can see the payout ratio is a little bit higher than we typically like, but overall, I think it's still fairly safe at 56%. But as for me personally, I do own some shares of Johnson & Johnson in my personal portfolio, but I was able to buy at a time when the price was much more attractive. I think currently at this price, this is not a stock I'm really considering adding more up to my portfolio. I'll likely continue to reinvest dividends and keep it on my watch list, but I don't plan on adding any more shares at the current price for this company. But go ahead and let me know your thoughts on Johnson & Johnson in the comments below, if you own any and if you plan on buying or selling any. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.